Hey, welcome. I'm John Zidar. This is Zidar Stock Trading Insights. I am excited to say I have joined the team of PB Alerts. This is a great organization. I wasn't quite aware of what the group was all about until they invited me in. And wow, this is a community of some real due diligence, some real great alerts, some great guidance and information and teaching. And I'm glad to be a part of that. Some of you may recognize me. Like I said, my name is John Zidar. I'm 60 years old. Yeah, I look like a lot of different sort of characters. I have done some videos on YouTube with another channel. I also have a Facebook page called Pennybois Stocks, which has been around since 2018 when we first thought prohibition was going to be coming to an end. Well, we're still waiting for that. My experience is primarily with penny stocks, OTC market to be more clear. I started with cannabis, as I said, and every single cannabis stock was a penny stock in 2018. Since time, a bunch have graduated up to the NASDAQ. However, none of them are American companies since it's still illegal in this country. I did move into small caps. I started trading options during the crash. I primarily moved back into OTC market when the stimulus checks started coming out, because everybody started putting their money into the market and many were actually gambling. They were investing in cheap sub penny stocks hoping for a home run, and there were hundreds, even thousands of percent every day sometime in February across the OTC market. It was astounding. Of course, once all the stimulus money was spent, it was over. So things have gotten back to normal. Now, what I would like to do is share some of the stuff I have learned about the OTC market and share what it is and what it isn't. What I'd like to do is to share two stocks with you that are graduating from the OTC market up to the NASDAQ. Ding, 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 ding. They actually get a bell. These companies are uplisting. Now, before I do that, I think it's important that you understand just a wee bit more about the OTC market. So I want to give you just a couple minutes crash course of a few key points that are quite important to know and will help you understand that the OTC market is not the ghetto of all the markets out there. True, it does have some ghetto in it, kind of like a tarnished city's reputation, say Detroit or Baltimore. Yeah, we know they've got some harsh areas in them, but if you've ever been there, if you've ever walked around the city of Detroit or Baltimore, they're beautiful. They've got gorgeous areas, and that's the OTC. It's just like a house. It's got a dark, dank basement you don't need to go to, but the rest of the house is great. So let me show you a few key points here that, well, you may not have known about the OTC. So the first thing that's absolutely vital to know about the OTC market stocks is the actual authorized site itself. Right here, the OTCmarkets.com. This is not a site just of news like all the other sites. This is an official site set up by FINRA to monitor all the filings and the news, to monitor all the stocks that are in the OTC market. Sub penny, penny, and yes, even regular stocks that are not penny stocks that are housed here in the OTC market. There are over 10,000 different securities here. Now, real quick, all you would have to do is put in a ticker and it will tell you everything that they know about it. The status of the company, if they have a transfer agent, if they're verified information. You can see across the top here, overview, quotes, security details. You can see how many shares they have in the float, how many outstanding, authorized. You can get a quick glance at their financials. You can even see every filing that they've had come in, and you can read those filings at just a touch of a button. So the OTC market is where all the information is housed for these companies. This is legitimate information, not hyped up at all. I mean, look at this site. Boring, no flash, no glitter, and a dull gray as their base color. But the information is legitimate. But in saying that, it's not exhaustive. A company can put all their information here, but most don't. So you'll get all the important stuff like the disclosures and the financials, and all of that will be here. But sometimes news and mergers and things like this, you have to go outside of the OTC. The next thing I want you to know about this is they have 3 tiers. The whole point to the OTC market is to grade the companies on their transparency. How risky, how safe are they? And they do that by looking at the quality and the quantity of information they release. And they basically have 3 tiers. You could think of them as good, better, and best. Pink, QB, and QX. Now the QX, folks, these stocks could easily be on the New York Stock Exchange or the NASDAQ without a problem. These are not what you would ever consider penny stocks. There are companies in here like Heineken, Adidas, EasyJet. These are companies that meet all the criteria of being transparent. You would not know these were on a penny stock OTC market. Matter of fact, the prices go from $5 to $30 to $300 to $3,000, yes, $30,000 a share. There are stocks in there that expensive. There are hundreds and hundreds of banks, domestic banks, foreign banks, all in there. There are lots of great companies there. The next one down is the QB. They call it the venture market because this is where pinks go when they want to venture off the pink board and into bigger markets. And you have to qualify by sharing more information. You have to start making your financials audited, not just taking your word for what you say you made. So this is where people like to uplist to show they're putting their best foot forward. And this intrigues a lot of investors, just seeing them go from a pink to the QB. However, do not let that infer that all the pinks are lazy companies, startup companies, bankrupt companies, because a lot of those are in there. This is where the ghetto resides. However, the pink is a very large area, and the ghetto is only a very small area of it. As a matter of fact, the truth be told, if you wanted to invest in any of these companies here, you would be investing in a pink OTC penny stock. But as you can see, these are not startup companies. These are not little companies. These are well-known brands. And you'll also notice most of them are foreign. And that is the reason why they're here. And these pink companies are not cheap either. Just because they're pinks does not mean they're cheap. Prices can be hundreds, even thousands of dollars for a pink. However, there are stocks you can buy 100,000 of for $100, even 1,000,000 shares for $100. So this is where the sub-penny stocks are as well. So there are lots of qualifications they have to cover financially, how many shareholders, how many shares they're selling. And once they tick all those boxes, all they have to do is request to be uplisted and pay some money. Take a look here. This is the average cost of what it is to uplist from the OTC market to the NASDAQ. It's not cheap. It's a lot of work, and you have to be serious. And once a company does uplist, there's normally a lot more money thrown at them because the big whales and the hedge funds are now allowed to invest. So, with that all being said, you know a little bit more. Let's jump into the first stock that is launching from the OTC to the NASDAQ.
Number 1.
First stock up tonight is Charge Enterprises, CRGE. And as you would expect, we're going to start off at the OTCmarkets.com to get the hard facts. And then I'll show you some good, interesting information on what they're doing that they don't show you here. Charge Enterprises is currently, at the making of this video, at $3.34, which does put it into the realm of being uplisted between $3 and $4. It is pink current. It is penny stock exempt. Now, what does that mean? Well, Real quick and easy. Basically, it says there are 3 conditions that a company can exclude itself from all of the regulations of the penny stock world just because they're being sold there. They don't have to obey those rules. The first one is if you're over $5. Well, they haven't made that one yet. The second one is if you're making $6 million a year average for 3 years. Well, they haven't done that. They just made revenues for the first time. And the third one is if you are making an excess of $2 million and been in business for at least 3 years, or $5 million and less than 3 years, which would put them in the ballpark. Basically, this just says that they are not a startup company and they are not broke. So they have those bases covered, and they are no longer actually a penny stock. But they are sold on the OTC market, and they are a pink. They are pink current. There is also pink no information and pink limited information. You're late or you're not talking. They are in great shape. We have no problem here. Now this tells us quite a lot about the company. Down here we can see the recent news, which we'll go over from a different angle, and you can see their recent filings, which are all up to date. What is interesting over here and definitely worth looking at is their share count. Now they have 500 million shares authorized. That's how many they can sell. They have a total of 152 million already on the market. So they got about 350 million they can add to the market if they need to. Doesn't look like they need to right yet. And here's the great part, the float. Now, it hasn't been updated since 2020, but I can see what's being held at the DTC 8, and there's 7 here. So it looks like the float is between 7 and 8 million. That is an extremely low float. Low floats keep a price moving fast when it moves. It catches speed easy. It's like a light little car compared to a semi. This moves quick, go-kart speed. We can also look over at the financials. This company is very interesting because it has only been in business since January 2019, and yet they started off with $10 million, just filed their first earnings reports, and did $84 million in revenue. They project they're going to do $450 million annually. That's in their first 3 years. So you gotta wonder, what does the company do? Well, think about the name, CRGE Enterprises, because it's all in the name. CRGE Enterprises basically has 2 prongs of business, but both relate to infrastructure. One is communications, a strategy and connected calls. They have private lines that they use so that you can actually have a service on your cell phone, but they also put up towers and have all sorts of equipment so that they can move signals, Wi-Fi, 5G, so that companies can use their new technologies on this infrastructure. The second prong that they are invested into and moving stronger and stronger into is the EV market, micro-mobility market, and personal charging market, all which do the same thing. Supply the users with electricity for their devices. Originally, this started with just the scooters. The scooters were a problem around the countries and around the world, being laid everywhere, being tripped on, lawsuits. People were moving machines to plug in and get electricity. This solved the solution. This was something everybody wanted. This not only looks good, it is safe. These are monitored and maintained by the company themselves. You can charge your personal scooter in these, or you can use one of their own scooters. They will then check these scooters as they come in, and if any damage is done, they go back to the factory and a new one takes its place. The micromobility infrastructure has been very successful for them. They are already in over 150 cities with 1.2 million scooters already deployed. And they actually have fleet sizes that is over 15,000 scooters launched in LA and in Paris. They did a deal in Paris back in 2019. just after they made a deal with a company for 5,000 locations. Reef Technologies owns parking lots and parking spaces all around the country, and they have transformed these wasted space into business opportunities, bodegas, kiosks, restaurants, and they have promised to load up 5,000 of these units out around the country. Now, most of their growth actually took place in the last part of last year, 2020. Between October and now, they have accomplished a lot. They have changed a lot of their management, or I shouldn't say changed, they've actually added to it. They have brought on a new CEO, a new COO, and a new Chief Business Officer, which is a former executive from Ford. They have acquired two companies, PTGI and ANS. These two companies are to help them with their telecom and their EV charging, because not only are they going to charge your scooters, but they are also moving into power bank charging. One of their newest products that is being bought up and used in hotels, restaurants, airports, all sorts of places where people are plugging in and using electricity, but there's not enough outlets for everybody. Or how about a ball game? You can actually rent a battery, pull it out of the power bank, take it with you, plug it into your device, and charge up. Stay charged during the entire game so you can film it on your phone. Then at the end of the day, walk back to the power bank and just put it back in. And since the whole country and world is moving into electric vehicle market, this is the primary push right now for this company. They are working on supplying as many electric chargers around this country as they can, with projected numbers like 18.7 million EV cars on the road by 2030. And right now we've got over 2 million of them already on the road. We need more charging units. Right now, the entire country has only about 100,000 charging units, with 32,000 of those all in one state, California. We need more. Millions of EV charging stations are needed. Actually, 13 million by 2030, which basically equates out to 120,000 a month that need to be installed. The company sees that EV charging and telecom network, both are worth $100 billion each, and they are going to do their best to tap into both markets. All right then, let's go take a look at the charts and see what the price action for Charge has been. So here we are on TOS, Thinkorswim's trading platform. This comes from TD Ameritrade, absolutely free if you have an account with them. This is for Charge CRGE. We are looking at 4 hour, 6 month. Each one of these bars constitutes 4 hours of activity, and each line is a day. So we've got 6 months here, and you can see our low and our high. And you can see it's about even. She's running up and down. As a matter of fact, if you take the middle point between 195 and 460, you end up at 327, right about there, roughly. So you can see the price action right now is pretty much even with its median price range. Up and down, it's right back to where it always comes home to. Let's come in on the 15-minute just so we can get a better view here. So you can see the price has been right under and just getting over that right now, and being just over $3, which is the entry price for this sort of company to get onto the NASDAQ. This is a low price, isn't it, for entry on the NASDAQ? So this is a great entry price. Could it go lower? Sure, it could go a few cents lower. There's no doubt about it. But is this a decent price? I think so, in my opinion, for a company that's going to be going on the NASDAQ that has increased its income as quickly as they have. This, in my opinion, is a great entry price. So Charge is definitely plugged into the needs of the masses. Electricity on the go, or at least to go. I mean, whether it be your devices, which there are tons of them coming out now, not just your iPads and your iPhones and your tablets, but also earpieces, headphones, watches, I don't know, tanning gear sooner or later. But the EV market is exploding, and they haven't even really touched that yet. That's what they're into now. Imagine the income. Right now they have done 80 million their first quarter. Now up to now they were a shell risk company. Yes, they were doing no business because they were setting up their business. Sounds like it was a bad thing, but they were hard at it. And since then, since October, this company has been blazing. So I feel this company is going to do very well in the future. Their market is only going to get bigger. Every single person basically is a consumer of what they sell, so a potential customer, a repeat customer. And when you think about it, they're selling this to businesses. This will bring people back into the store repeatedly. This will keep people in the establishment longer, and it makes them money. They already have a supply of electricity coming into their business. All they do is plug in. That's right, you don't wire these up, you plug them in, and you are then charging other people for your electricity at a higher rate by charging up other people. This is really going to grow. You can see that, right? I honestly believe that this company could see their name as a household word like Google or Kleenex. They keep this up. They went from 10 million to 80 million, and they plan on doing 450 million their first year, and they are just getting going now. Now, most companies, when they do an uplist, they do a reverse split, and this was no exception to the rule. They did theirs back in October. They did a 1 to 500 reverse split. So for every 500 shares you owned, they gave you one new share, and that new share was worth 500 times more than your old shares. So your investment value didn't change, but how many shares you had did. In saying that, you're safe. There's not going to be another reverse split. They had one in 2008, and they just had one in 2020, and there's not enough shares to do another reverse split. That's why the float is so low. Excellent. Now this company has got a lot going for it because the equipment that they put out pays for itself in less than a year with only 85% usage. After that, it's a 50% profit margin over and over and over again. The company's got a lot of catalysts, and they're just starting. They have made it in less than 3 years to profit margins. They are right at it. They did 84 million, and it cost them 83 million to make that 84 million. But that's what happens with startup companies. There's a lot of investment, and theirs pays off in a year. So they did file just here August 3rd to uplist to the NASDAQ. It normally takes 4 to 6 weeks to have it approved, if it's going to be approved. No guarantees. However, if there's any questions or glitches, it could take longer. However, in many cases, it takes even less time. So there's not a lot of time to consider this stock, but do your DD. Don't just trust me. I'm not licensed and I'm not a professional, but I have my opinion, and I'm trying to just share a little insight into this stock and what it may just do. So the second stock we're going to look at tonight, that's uplisting to the NASDAQ from the OTC, is Peak Fintech Group. PKKF is their ticker. Now, they are on the QX tier of the OTC, which is the absolute best tier you can be on. The most transparent. They supply the most information they can, and they're very detailed about it. That's a company that you feel secure with because you know everything that's going on. In saying that though, when I come here, and as I've said before, the OTC market is where you come for the hard facts and the true facts. When we look at their share structure right now, and I don't know why, there are no information available on anything with regard to their shares. So I had to go do a little bit of searching, trying to find out what the float was. I found it right here, and it's been stated a couple times, and I verified it. We have 80 million in the outstanding. That is all the shares available to management and the public. 180 million. And the float has only got 37 million. Now this isn't as low as 7 million as CRGE has, but 37 million is a unbelievably great float. Really, really good. Now their numbers were higher before because they too just did a split. I believe it was at the very beginning of the year. Theirs was much smaller than a 1 to 500. Theirs was only a 1 to 2. So they basically cut their shares in half. And that leaves us with 37 in the float. You can see that this too is a penny stock exempt stock. So that means they have enough money and they've been in business long enough that they're not considered a minor anymore. They're adults. They're still housed here. They still live at home. They haven't gotten out yet, but they are adults. So this is not a penny stock, though it's sold on the penny stock exchange. As the name suggests, they are a fintech business. Fintech is short for finance technology. Finance technology is big, huge right now, but it's not new. Fintech goes all the way back to, well, do you remember PayPal when it first started off with eBay? They were fintech. And since time, there have been hundreds, no, probably thousands of fintech companies that have burst onto the market. And then COVID came along, locked us all up, and well, that became mainstream norm. And now it is huge business. And this company, as far as I can see right now, looks to have maybe the biggest market of any fintech company I've seen. So what exactly makes me think that? Well, let me show you. Over here on the overview page, we've got some recent news that came out here just at the end of July. Now, I'm going to tell you right now, this title does not give justice to the importance and relevance of this news. Honestly, this is the pinnacle piece of news this company will probably ever have. I can't imagine a more valuable piece of news than this. I'm telling you though, it doesn't sound like much. Peak Fintech acquires minority stake in China UnionPay subsidiary. Rongbang is a subsidiary, and it is a subsidiary of China UnionPay. So what's the big deal? It's just another company, right? Wrong. The fact is, China UnionPay is a state-owned entity and China's largest point-of-sale electronic funds transfer network. It is also the only interbank network in China that links all the automatic teller machines of all the banks throughout the entire country. As a matter of fact, according to Wikipedia, UnionPay is the largest card payment organization in the world, ahead of Visa and MasterCard. China UnionPay, also known as UnionPay or CUP for short, was founded in March of 2002. Now that was almost 20 years ago, and since time there are now over 7 billion UnionPay cards out there in the world. Now this is an online bank. However, CUP works as a real-time bank. So as soon as the customer pays, they receive their goods or services. Now, this is a Chinese company and they deal mostly in China, but they are working around the world. Absolutely, they're in over 180 countries right now. And if you are a UnionPay card holder, you can withdraw money at, well, over 1.7 ATMs outside of China, whether that be New Zealand, Russia, Europe, the United Arab Emirates, or even the United States. Right now, UnionPay is extensively accepted at over 90% of all the merchants in cities like New York, Hawaii, San Francisco, Orlando, Chicago. This now allows the company to not only process payments and settle transactions, but transfer funds between lending institutions, banks, and businesses, all the way down to small micro-cap businesses, the ma-and-pop businesses. And that is what caught China UnionPay's attention to peak, is that their lending institution was reaching all the way down to where most of China's workforce is at. So, this is the diadem to the crown. China UnionPay is the primary pillar that isn't just going to lift this company up to heights never seen before, but is going to catapult it into the largest market of any fintech company as far as I can see. Over the last few years, Peak has created two platforms, Cubular Lending Hub and the Gold River distribution platforms, and they have connected China UnionPay to both. So basically what Peak FinTech has done here is they have taken a supply chain and they have taken finance and they have brought the two together, covering all the bases for the businesses in China. And they are primarily focused on the medium and small businesses, which is the hugest portion of the workforce in China, which is why UnionPay has got their back. Now, Cubular is the side for finances. Let's take a look at their site. So this is the Cubular site. This is just one site for the company, and they basically break down just real quick what they do. They have business financing so that people can borrow money for whatever they need. And this is all free. You sign up for free. It's kind of like a dating app. They take all the business's information, put it into the system. They've got over 200 different banks and financial institutions that they then send the information out to, and they match lenders to borrowers. And this is how the operation runs. But that's only the tip of the iceberg. They have business advertising. They actually have over 55,000 influencers in China that are on the payroll that advertise loads of the products that they sell. And the funny thing is that many of these influencers actually take loans out from Cubular just to build their business. You also get marketing intelligence, which is all the analytics about your customers, about the market, and all of this, as I said, is a service that they give for free. Now, there's a lot of information. I can't go through it all. You need to do your own DD, but they have got this platform solid and secure, and it is growing across the entire globe, not just in China. Now, the company's very excited about this. As a matter of fact, here on the press release, you can read right down here from the CEO himself, this is without a doubt one of the most important agreements in the company's history. As I said, I can't think of another piece of news that's going to be more important than this for the company's growth. If we go up just a little bit further, you can get some idea of how exciting this is for the company. The services associated with this agreement, once fully implemented, will touch every transaction conducted throughout the Lending Hub ecosystem. This means that any platform activity that implies the movement of funds, whether it's financing to help one of the consumer electronic distributors, of which there are 60,000 online retail clients, or one of BJM's more than 250,000 retail clients, or even one of the 55,000 social media influencers affiliated with the company, will result in Peak earning a transaction fee. And that's what this is about. However, the primary importance here is that UnionPay is state-owned. It's backed and controlled by China. And as long as China lets Peak use them, they're in the green. They've got no troubles. They're not in the crosshairs. They've actually got China on their side. And being bigger than Visa and MasterCard, folks, at a $5 price right now, this is going to make Humble and PayPal and all the other fintechs out there look like startup companies in just a couple of years, in my opinion. So now, let's go take a look at the other pillar, which makes this really a great opportunity, not only for China, but for us, because they supply goods and services that you're allowed to pay for with Cubular. The company has built its business on the backbone of 6 subsidiaries. 5 are which are solely related to the financial aspects of the company. One, however, AST, Asia Synergy Technologies, is solely responsible for Gold River. Now, Gold River used to procure raw materials such as plastic and steel, but it has been repurposed and repositioned now as a supply chain broker. This is a wholly owned platform that allows clients to purchase products, sell products, manage inventory, make financing requests, and basically enable all supply chain transactions, both for retailers and suppliers. Now, before they got with UnionPay, they made some tremendously huge deals with some of the biggest national wholesale distributors in China. After they have made this deal, I truly anticipate that they're going to have more retailers knocking on their door than they ever approached. Now let's take a quick look at just a few of these huge deals that they've made, even including 7-Eleven. So rather than drag you around the internet to all the different PRs and articles with all the information I want to share with you, I've gone and done that. And I brought it back here to my Word and I've consolidated it. And I want to share this with you because this is important. This is where the big business comes from, because they've tapped into the retail market by bringing it to them and qualifying them for business. Now, this is not everything they've done by any means, but the deals I'm showing you are juggernaut deals because they're juggernaut companies. They've got little competition. These are giant national wholesale retailers of China with giant, huge consumer bases already in place. Now, I am going to deny you the privilege of laughing at me because I'm not even going to attempt to say these names. This company is a wholesale distributor for electronics gear. They sell laptops, smartphones, and other stuff. And they do this through some of the biggest outlets in China. And they're doing about $50 billion a year in business. Not small at all. This next company has 1,100 retail clients, including e-commerce giant JD.com, and owns distribution rights to several popular beverages in China. Boy, you get distribution rights in China, you got some tap, including exclusive rights to Red Bull energy drinks at PetroChina convenience stores and 7-Eleven. Yes, you heard me right, 7-Eleven. They have a large presence in China, and they expect to distribute approximately 24 million cans a year of Red Bull. And they expect that business now will be picked up through Cubular, excuse me. Then you've got this company. They've got a couple of deals going. The China Oil and Foodstuffs Corporation is China's largest state-owned food processor, manufacturer, commodities trader with exclusive distribution rights to approximately 200,000 PetroChina convenience stores. That's a huge convenience store operation. The company doesn't just run in China, it also runs in Japan, the US, the United Kingdom, Australia, and Canada, which makes it one of the largest agribusiness groups in all of Asia. Another juggernaut. Then this company is the second largest supplier of steel products in the country of China, second largest, and is present in 31 major cities across China. And again, this company is involved with Cubular Lending Hub. So these are big orders. These are big purchases for steel. Then you have JD.com, which is a Chinese e-commerce online. You can look it up online. They're pretty big. One of two massive B2C online retailers in China. By transaction volume and revenue, a member of the Fortune Global 500 and major competitor to Alibaba and Tmall. That's serious competitors. That tells you how big that JD.com is. And the last deal that we're looking at is ShopX. And they say if you want to understand what ShopX is, think of Shopify or Square, just bigger. Of course, bigger. ShopX has solutions that are used by retailers when they operate on Alibaba, JD.com, TikTok, Pinduoduo. Those are all transactions that the company's making money for. And 24 other online marketplaces who collectively have over 9 million stores and 80 million micro shops. Whew. And finally, the CEO himself said, "I can't stress enough how important this partnership is for us with ShopX. We believe this will undoubtedly dramatically accelerate our influence in the online retail space, which makes this new relationship with ShopX an extremely valuable one for Peak." Now, the company has taken a turn financially speaking. They have very little revenues through the years, and they missed their mark for the last quarter last year. But they did sign up a lot of new clients. And it showed because this last quarter, they broke all records. They went 265% year over year for that quarter. Peak generated 3.5 times more revenue in the first quarter of 2021 than it did in Q1 2020. Now, given that the first quarter has historically always been the smallest revenue generating quarter for the company due to the fact of Chinese New Year holiday. The balance of the year of 2021 as a whole, though, promises to be an exceptional year because of all the new customers and clients that they got. Now, if we scroll down here, they do give us a look at the last few years of revenue, and you can see it has jumped. We are at 14 million compared to 3 million a year ago, under a million 2 years ago, and not worth talking about 3 years ago. So they are definitely moving forward. They are anticipating to do between 90 and 100 million this year, 350 million in 2022, and over 600 million in 2023. However, the company does have a habit of underestimating what they're going to do, but doing more than they promise, which is always a good thing to see a company do. Now, the company does plan on changing their name to Tenet. I believe that's how it's pronounced, T-E-N-E-T, and their new ticker will be TNT. Whoa, slide on in here, take a look at the charts. This is PKKFF, easy ticker to remember, eh? This is 1 year. This is 1 year ago today, right there. You can see the prices, 17 cents a year ago today. And we just hit a high here recently of $5.31 with a jump this month. And right now she's at $5. You see all this volume. Those deals we just looked at, they happened in October, happened in November. That's when this is. And all of that news brought in all these investors. It was exciting. But the news got a little silent, and so did the investors. And it dipped a wee bit until this month. Let's come in on the 20 days so we can see this month. And that stands out now, doesn't it? Boom! Anybody want to take a guess what day this jump happened on? Yes, you in the back. That's right, Tommy. Union Pay Day. That's right. This is when the news came out about Union Pay. Look, that was a thumbs up from China. They were telling Peak FinTech, you're okay by us. We're going to let you make money. And right now, that's a big deal. And it shows. This jumped from $2.12 up to $4.24. And it kept going. It did not fall. And I don't anticipate this to fall. You know, a lot of people are saying that this is a ground floor opportunity. It's hard to project, but when you have the amount of numbers that this company has now, the amount of contacts, influencers, being in China, getting approval, this can really do a lot more than we anticipate. Lots of revenue streams can start coming in, and it can become exponential. So it is quite exciting. Right now, it looks like the MACD is coming back up. She is going to swing. I can see that is just building up. We got a little bit of green coming in here. The RSI is up to 63. This is looking really good. Now, this is on the hour. Just so we can see for Monday, let's see what this shows for Monday. Well, you had 3 days of constant growth, not surging, just steady growth, which is what you like to see in a stock. Reliable volume down here on the bottom. And there's not a whole lot going on down here, but you can see the RSI is staying above 50, which keeps the grass growing. I don't expect this to fall, folks. I really don't. Not with the news that just came out, and there's more news going to constantly come. As I said, retailers are going to come knocking on their door. Banks are going to come knocking on their door. People are going to want to be a part of this because it touches on to so many others that, well, it helps business do business. And that's what everybody wants. Now, Peak first filed to have their shares uplisted to the NASDAQ in February. The only thing that's really been holding them back has been the price of the shares. It has been down. It has not been at that $3-4 mark, but now it's at $5. This to me looks like, and I don't expect the price to fall, so I expect them to be uplisted very soon. And I've got to say, that news for Union Pay, you saw how much it jumped. Had this stock been on the NASDAQ, it would have jumped a lot further because that news was truly a jewel. And had the big whalers and the hedge funds had a chance to dip into this stock then, they would have. Does that mean they won't now? No, they definitely will. I have full belief that this stock is going to be appealing to people with money because this is a company wrapped around companies with a lot of money. They know how to make money and they're working together to capitalize on everything they know how to do. So I think Peak FinTech is going to be a unicorn of a stock. Is it going to happen in a year or two? Well, probably not. But in the fintech world, anything can happen. So there you go, folks. Those are two stocks that are uplisting to the NASDAQ, CRGE and Peak FinTech. Both are in hot sectors. One is electricity, EV, micro mobility, charging. The other one is in fintech, borrowing, loaning, supply chain, helping retail investors, mostly small. One is all domestic. Well, not really, because they're in Paris, they're in France, they are just all over the country. CRGEs, and we're going to see more of them. FinTech, well, they are mostly China, but they too are in many countries, and they are planning on moving into Canada this year. Not just as a little business, but full-fledged in Canada. That wants to be their primary foothold to get into North America because they do want America involved in their business. They are eyeing America. Why? Because we spend a lot of money. This is how Alibaba got so big. Americans buying from them. Amazon got so big selling Chinese goods that Americans were buying online from J.D. Thomas and Tmall and Alibaba. So that is just going to get bigger and bigger and bigger. I'm excited about both these stocks. I don't know which one to invest in first. Probably Peak, because they're probably going to hit the market first. Now remember, folks, I've only covered some of the information. There's a lot more you should probably know, especially if you're going to be investing in these stocks and not just playing them. So do your own DD. I've given you a good place to start. I wish you the best. I'll see you at the bank. Good luck, folks.